What's up everyone, Tom here with another video. Well guys, the stock market just got hammered yesterday in terms of trade. We saw big moves across all the indices, and of course we'll be talking about why that's happening and our technical analysis levels for the S&P 500, Nasdaq, dollar index, volatility index, and gold, and more throughout this video. Is the stock market telling us what to expect for the next 3 to 6 months after the election? Stay tuned. So as a community, we love to start with taking a look at the last 24 hours on this channel in the markets. And yesterday we saw a pretty big move across the board in several key sectors. Notably, things like Microsoft and Google were leading the charge in terms of declines, and really only Apple and Amazon managed to eke out basically neutral days. There wasn't too much safe yesterday in the markets. If we're taking a look at what happened in the general flow, we were doing live streaming over here, and we obviously spoke about this in the live stream. We spoke about how the first hour has been traditionally the trap for us, the retail traders. We're kind of like the silly money goes in on expectations, and then throughout the day, we often are seeing a very different story in the markets. And that's certainly true for all major three indices yesterday. The Nasdaq ended 1.61% down, S&P 500 1.86%, and the Dow Jones 2.29%. And really the entire day had sustained selling after that first hour, and a little bit of buying at the end shows us that there was some purchasing from Wall Street overall. If we're taking a look at sectors, the story of the last couple of weeks has been weak energy sector, and I think this leads into one of the major cases and major stories that really is starting to worry the market. It turns out that all of the bad news is starting to be felt by the market due to a lack of stimulus currently coming through. We're in earnings week, Super Thursday coming up. Shopify, Apple, Amazon, Facebook, Activision Blizzard, Spotify, just to name a few. We have big earnings this week, and regardless of this earnings, if it's a mixed bag, as in some are doing well and some aren't, which has been happening a little bit so far in the pre-earnings, then we are going to probably see further downside action. It may not even be enough to save the current market movement into the US election. So how does the market usually react 8 calendar days out before a presidential election? I think this is a very interesting stat to look at. And the market's usually a pretty good guide of who's going to win the election overall. But you'll notice that generally speaking, there is a positive correlation with 8 days before the election. These are all the previous elections here since 1944. And there's generally been a positive correlation in the lead up to the election over those 8 days. So we've already had a down day now, and what's that telling us about the parties overall? Well, we have, of course, the S&P 500 telling us a little bit about who's going to win and who's going to be losing. Overall, incumbent party 1, generally the stock market will react this kind of way 1 month prior, 3 months prior, and 6 months prior. Now, if it's been negative into the election, notice incumbent party lost in this case. We're now looking at a 3 month, 1 month, little bit of a loss in the market. So it's kind of saying potentially the market thinks there is a Biden win here. Now, we're not getting political on this channel. Obviously, we're just looking at the pure facts, but that is what has happened over previous times since 1936. What's also interesting is the next couple of months after that election win or loss. So pretty much in both times, 1 day after the election overall has been a negative day whether the incumbent party won or lost. And then if we're taking a look at further stats, 1 week after has been negative, 1 month after has been generally neutral. And then of course the year end has been quite positive if the incumbent party lost. And this is probably more that Christmas rush period in December. Then 6 months and 1 year after have always been generally positive. But what's interesting to note is we've had less positivity when the incumbent party has lost. And there's a couple of reasons about that. And I think it's got to do with policy shifts, change and everything with the administration, etc. A very interesting chart with some very good statistics backing it up. So is the market telling us something that we don't know yet about the election? And more importantly, what's going to happen after the election in terms of either party winning? Volume, of course, did spike up a little bit in terms of the numbers, but I think most importantly, we are out of the channel, guys. We are out of the Volatility Index channel. This is the area that has been trapping the volatility or fear index for a little while. We literally were talking about this yesterday on the live stream. We've been talking about it for the last couple of days, how when it declined, there was a good chance, and the community definitely was behind this idea, that the volatility index would spike pretty hard coming into the election. It was a fairly safe kind of idea that that would happen. So now that we're outside and we've clearly closed above this 30, what do we expect to happen? Well, one thing with the stock market is generally when it moves this aggressively to the downside, there's a thing like the bounce. The next day is often a little bit of a bounce day. There's not always a huge amount of follow-on effect, and don't be surprised if we do see the fear index come down a little bit. However, that doesn't change the fact that we talked about this zone, we talked about how it was 5 points in length, and that has not transpired yet on the volatility or fear index. We still expect it to go up to 35, which could mean even more volatility in the market. And when we look at the price action on the S&P 500 in just a few minutes, you'll notice that we are under a very key point, and that's the important key change between the buyers and the sellers fundamentally in the stock market right now. Put-call ratios are on the rise, so that means that there are more puts being open than calls currently in the market. We haven't really seen a number this large since May, and generally speaking, whenever puts go too high, we actually see a countering effect on the markets. They often are a bit of a trap, so I would have preferred this number to stay down, but that was a big spike in put-call ratio yesterday, and we are looking like we could be even breaking out to potentially Feb or March areas. I don't know about March, but certainly put-call ratios are on the rise, and I wouldn't be at all surprised for it to go back to around a 1.2 figure here in terms of puts being opened. So on to two of our other indicators. Dollar index remains really in this kind of 93 and slightly above. It's just struggled through and closed above yesterday, the 93.08. It hit the 50 exponential moving average here, the blue line, on the 4 hour. And as we know, this is not really out of the woods yet. I'd like to see another high, and then it probably will follow on. Now, if dollar is strengthening, generally that means we are seeing further weakness in the stock market. But really, the dollar is pretty much contingent right now on the stimulus deal, and brings up another point that if we do see a stimulus deal, that's the one thing that right now will most likely save the stock market in terms of performance. If we're talking about general economics in the world, things aren't looking so good. They need the stimulus deal. We need the stimulus deal in the markets before they're going to go bullish again. And that will eventually come. We do know that. Dr. Copper's telling us that everything's still okay in terms of the global recovery. We didn't see too much of a move on copper. It came back down to this red line being the 20 exponential moving average on a very important time frame, being the daily. It's finding some level of support here. That's fine, and still pretty much shows us that there is a corrective path long term at this stage for copper overall, and therefore for the markets. Now, what happened on the Nasdaq? No surprise. It broke under 11.6, and for anyone that's been watching our videos over the last couple of weeks, we have been trapping 200-point ranges on the Nasdaq. Where did it go to? It traveled on down to the 11.4, found support, and bounced off. So very, very nice for a few traders out there and investors. I'm sure many people are looking at this 50 exponential moving average on the daily. This is the NDX, the real market, and it bounced off that level quite well. Now, what do we expect for the Nasdaq? Well, we expect the Nasdaq to continue up after hours, to come back to the 50 and 20 exponential moving averages here and test the previous support at 11,600 and act as resistance. This is going to be role reversal. When we go into the smaller time frames, it'll become even more clear why that is. Let's have a look at a 1 hour. So if we take a look at a 1 hour here, we're going to have a 1 hour 20 moving average. We're going to have multiple body supports, multiple body resistances. It's going to be hard for the bulls to pressure this zone now. So we might see a market move up, find resistance, and then bounce back down and start testing the 11.4 again. Again, it gets through 11.4. Where's it going to go to? 11.2. And there's previous really heavy actually futures support around the 11.2 level. So it looks like we're in a bit of a downtrend now. We've broken through and closed below some key pivotal areas. We're making a series of lower lows or lower troughs and lower peaks. And really the 20 has been the standout here, as we talked about yesterday, on the Nasdaq. It's been holding this thing. Look at it. Every time it's hitting this 20, it's selling off that 20 zone and acting as a very, very nice sell pressure. Again, why we're focusing on this 11.6 over the next 24 hours. On to gold before we look at the Nasdaq. I think gold is an important indicator of course, hedging in the markets. And at this stage, gold has been holding this 1896.50 zone. Why is it that area? Who knows? But if we're looking at the body closes, we have a body close here, wick rejections here, obviously a rejection off that level, and then body closes again off that zone. We have not had a body close, at least recently, underneath this area. So for sellers of gold, if you're looking at selling it, you really need to see the market get underneath this zone, come back and test it where it tests the previous support as resistance, and then of course moves lower to the 1880 and then possibly even the 1850. For buyers of gold, I think really the only thing you can do right now is look for peak breaks above 1930. There's a ton of chop in this zone. And the problem with chop is that you are going to go into an election and there's going to be a lot of toing and froing each way on this one. Gold's going to move pretty hard on that election day. It's going to be difficult, I think, to trade. You'd probably be wanting to dial into really small time frames and look for scalping and day trading opportunities here at these prices in gold. It's not really at a favorable point either for the bulls or the bears right now, I don't think. So let's talk about the real market first on the S&P 500, and we'll go and have a look at the daily close here. So the daily close, 3,400 flat on the market. It got under that 3420, 3430 zone that we've seen holding the bulls up for so long. It's come right through and it got as low as 33.65 here on the real market. It was a pretty decent little flash kind of sell-off there in the market, followed by some buying, and very, very similar to what we saw on the Nasdaq. We expect the market to come back up and test the 3420 from the bottom up. And that means that the market will probably start to bounce during the Asian session, come into the market somewhere around 3420 potentially, and then there should be some selling resistance here. Now, again, we see a stimulus plan. Well, that's going to be very, very different. We see some other bit of news, things can change. But overall, that would be something that makes sense with the technical analysis that we're seeing right now in the market. Two supports, previous resistance, 20, very, very similar to the Nasdaq. But I think the Nasdaq's been even better trading because of those 200-point increments. On the futures right now, where is it? Well, it's back at this point. It's back at the 34.12, and the 20 moving average is actually a little bit lower here on the futures market. It's very different than, of course, the real market overall. If we're taking a look at the futures market, we go to the 4 hour. I think it's pretty plain to see that we are in the zone right now of where we expect to bounce, but things have changed in terms of fundamentals in the market. People are definitely selling this market. Even if you were taking a trend line through here, we got to close below that zone. You'll know if you've been following this channel for a while, guys, we don't necessarily love trend lines so much, but you can draw certain trend lines if you wanted to. And I use them more as an indicator of what other people might be seeing. So there's a clear resistance trend line across the board here. It got reached on the 23rd and sold off for. Do we now see the market come up a little bit more than we expect, hit this again, and then bounce down? It's possible, but I think that Nasdaq and the S&P 500 at 3420 to 3430 should interact with some resistance and selling pressure there. So I just wanted to give a quick shout out to everybody in the community. Thank you so much for supporting us over the last couple of months. We've really enjoyed bringing you all these videos and we'll continue to do so. If you enjoyed this video, please remember to subscribe and of course hit that alert button and give us a big thumbs up. It does help us with the YouTube algorithm right now. We'll be doing the live stream for the US election financially next week, and of course Monday live stream and daily content videos for interesting things in the market. It's certainly heating up from the way we're looking at it. Good luck, make as much money as possible, and we'll see you in the next video. Bye guys.